Hi there, Kar Yong here, and welcome back to another video. Now, this specific video here, I'm recording it, and also at the same time, I'm going to show you a snippet of a recording of an event that we did recently. Now, if today you are someone who is looking to trade the US equities market or the US stock market, then this particular video here is actually designed, kind of like put together specifically for you. Okay, and of course, if you are already very successful trading the equities market, this video here might also give you some value because I'm not sure exactly what are the methods and the strategies they're using, but in this video, I'm sharing with you an approach, a unique way that myself and my team have done all the hard work in looking at the historical data to kind of find strong and reliable trading opportunities in the equity side of things, right? So this method itself, in this little recording that I'm going to show you later on, okay, showing you that whether if today you're looking to do kind of like a shorter term swing trade in the equities market, or you're looking to invest long term into it, okay, this unique method over here that we have been using is able to actually value add to either a short-term trader or a long-term investor. And the beauty of it, after you watch this video over here, you realize that it can be really that simple yet effective, and a lot of our traders that's using this method also agree that it's a very stress-free way of looking at the equities market. So at the end of this video, if you feel that this method here is something that is able to value add and help you in your equities trading or even investing, we do have an offer prepared for you, right? But don't worry about that first, okay? I would want you to really benefit and understand what this method is, okay? And only if you see value in it, then that offer makes sense, right? Okay, so don't worry about it. Watch the recording that I've prepared for you, okay? And of course, if you want to, I've included the link in the description where you'll be able to click into it and get hold of this offer if, let's say, this is something that you would love to. Okay, so without further ado, I'm gonna just show you the recording and enjoy. Good. Okay, so that is where we cover the first two. Okay, so now to quickly summarize what we've covered so far before we jump into this last portion here, okay, we have talked about number one, okay, we'll talk about macro cycle, okay, and we have actually identified that semi is right now one of the huge industry we want to pay attention to. Okay, sector rotation, basically, the add-on to that is the complementary ratios to look up for in terms of identifying whether we're going to see a bear market. Okay, so how then we start to drill down and take action. Okay, and for me, when I look at stocks, okay, so if today I'm looking at maybe trades, okay, or even longer term investment, but primary trades first. Trades meaning maybe I'm looking at it from a perspective of maybe 1 month, or at most maybe about 2-3 months, right? To me, those are considered trades, short term. Investment means to me, okay, when I define an investment idea, okay, it's somewhere between like a year, which means I'm prepared to hold on to the idea for a year. That to me is an investment idea. If today I'm looking at trades, again, it's somewhere about maybe 1 to 3 months. Okay, so I do both. Okay, and the macro framework does guide me in both as well. Okay, so how then do I combine that with seasonality, right? With historical statistics. Okay, so generally, again, two ways. Okay, one is I trade them directly. So these are more like short-term trades. Okay, so if today I kind of like understand and figured that, oh, okay, let's say for example like Netflix, okay, has historical statistics right now that tells me it's a good time to buy, then what I do is I'll just buy it. Okay, that's about it, right? There's nothing macro about Netflix. It's just based on historical stats. It has a probability of rallying for the past 10 years, and therefore I just buy it. Okay, that's the other aspect where we use it to stock pick and filter. And in this case, it's a little bit more towards the investment idea. Okay, so for example, we talk a lot about semi today, right? Semiconductor. Okay, so I understand some of the companies that are fundamentally strong in this industry, but at the same time, I do not want to just anyhow buy them, right? So I have multiple ways that I can actually stop it. Okay, so I can look at maybe valuation. Okay, I can look at technical analysis. I can, of course, then also use seasonality to give me that historical statistics to guide me. Okay, when should I get involved? So, for example, right, if today I want to buy Taiwan Semiconductor, okay, I don't just anyhow buy, right? Because today you need to know why you're getting it at this particular price. So you either look at technical, you look at a certain patterns that technical chart tells you, okay, now can buy, or you can actually use seasonality, right? Which tells you, okay, if today you're looking to buy, which window of period has the highest chance of rallying, okay? And then that's the period where you get involved in it, okay? So seasonality in a way, okay, can give me the time element when to get in. And of course, if today I'm looking at trading, it also let me know what stock to be trading, okay? Because there's so many stocks out there in the US. Based on seasonality stats, I can quickly filter them and say that, this week, these are the stocks that has higher probability than the rest, ignore. Okay, so that's how we can look at it. Okay, just to give you some example on some of the recent historical trades that we took, right? So I'm pretty sure you guys know, I mean, some of this I've shared it in the weekend, okay, but today we'll go a little bit deeper and show you the chart, okay, how this is being executed. Okay, so you can see over here, this is by one of the traders, right? So the email that came in was you have entered the very first position on Paycom. Okay, and of course, I can't remember it's a he or she, but basically this trader actually made 11% from this particular trade. Okay, so how this Paycom trade works is very simple. Okay, we search for during that window period, we search for the stocks that has a higher chance of rallying. Okay, based on historically 10 years data. Okay, and then what happens is that at that very specific date. Okay, so some traders here as well. Okay, so many of them actually profited from Paycom. Okay, so what happened is on that specific date. Okay, so in this case here is 30th of July. Okay, so for the past 10 years, okay, Paycom on 30th of July to 3rd of Sep has a huge probability of rallying. Okay, so what happened is we just entered. That's it. Okay, no fundamental, no technical, trade it directly. Okay, and this is what I call statistics trading, right? Basically, you're just making a decision based on, oh, okay, the statistics are there to support a buy trade. We get in. That's it. Okay, that's how I trade primarily on my stocks. Okay, so we enter on 30th, and then the seasonality says that, oh, it ends on 3rd of September, and then we get out on 3rd of September, right? Of course, the stock actually rallied a little bit after that, but so be it. Okay, we are not trying to catch the very bottom. We are not trying to catch the very top. But Paycom here is a fairly easy trade because you can see when we entered immediately, it starts to make money. Okay, but not all trades are like that. Let me show you some others, right? So this one here is from one of the traders that took the JD spots, right? So this is actually listed in London. Okay, and why we look at it because sometimes the US market might not give us the solid opportunities. We also look at Europe and London. Okay, but I would say most of my trades, 80% of them come from US market, right? The remaining 20, some of them are Europe, some of them are UK. Okay, so JD Sports over here, we have two positions, right? You can see first we entered on the 24th of Oct, then the second trade 6th of Sep, and then we both exited on 17th of Sep. Okay, and you can see seasonality, the power of seasonality, right? We exited almost at the very top where it's about to U-turn. Okay, so it's not like a magic dust, or it's not like a crystal ball that we know, right? But what we do is simply just, the statistics for the past 10 years says that after 17 of Sep, the chance of rallying is not there anymore, right? And therefore we just exit because historically that's the case, and therefore today we're gonna do it. Okay, that's about it. Okay, so you ask me why it reversed on 17th of Sep, I don't know. Okay, but based on historical stats past 10 years, that's how it has been reacting, and therefore we just ride on what has happened to our advantage. That's what seasonality is, right? So this one here, solid trade as well, right? We almost exited at the very top before it reversed. Okay, another one over here, okay, just to share with you, okay, this one is the trade that this particular trader took, okay, is on NVIDIA and NOW. Of course, he took Paycom as well, okay, but I just want to cover on NVIDIA and NOW. Okay, so NVIDIA, you can see over here, not all trades are going to be straightforward. Okay, not all trades when you enter immediately make money. Okay, so if you take a look at NVIDIA, right, we entered on the 6th of July. The market actually kind of like instantly dropped the next few days, right? There's also that stock split, but the market dropped. Okay, but we are convicted to this trade because why? Seasonality statistics tells us that no need to worry. Okay, because there's that chance that it can still ride. Okay, so we just hold through, right? Nothing. We are disciplined in following the stats. So the stat says exit on 17th of Sep. Okay, so we actually held through the entire drawdown period, and then it just popped up a little bit, and then for the next few days we exited on 17th of Sep. Okay, again almost close to the top. Okay, but I just want to also highlight, not all trades are gonna be winning. Not all trades are gonna be so easy. Some trades are gonna be like NVIDIA, where you might get also drawdown. It's very common in our trading journey, yeah? And I also show you another one in NOW. Service now is a little bit straightforward. Okay, same thing, you enter, exit, okay? But this one here, you can see we did not really catch the very top, okay? So I want to show you like the whole trading journey, right? It's not gonna be picture perfect. It's not gonna be like always catching the very bottom, exit at the very top. Yes, from time to time you might get that, but it's not gonna be every time. And what's more important is you don't need that. Okay, you don't need that to really make money. Okay, because what you need is the consistency and the discipline to follow the strategy, right? Because this strategy here is entirely based on statistics. We need to be very consistent and disciplined in following the stats. That's about it. Okay, just to show you a little bit more, right? Over here, I want to highlight the third point that this trader shared, right? Losing trade on STZ, SHW. There are losing trade, right? Don't get me wrong. Okay, there. If someone comes in and tell you 100% sure win, you know it's not true. Okay, even if today you are new to trading, I think you should already know trading and investing. There's no such thing as 100%. Okay, so that's what I want to highlight. Okay, but you know there are many good trades that we managed to catch just based on statistics itself. Okay, I might not know of that stock. I have no idea what drives that stocks, but statistics is there. We take it. Okay, so now that is trading it directly. Okay, just trade the seasonal directly. Okay, what about complementing it? Okay, so here are the stats by just trading it directly. Yeah, so no further analysis, just based on stats. We enter the trade, we exit the trade. Since October 2020 until recently, we have 81 trade close, and then those are the stats, right? Just wanted to highlight that. Okay, and if you invested, let's say, 10,000 to do this in your portfolio, okay, then that 1 year actually generated more than 300 ROI. Okay, so that's the first method, right? Trade it directly. Okay, the second here is how we can look to complement. Okay, so I'm going to combine it with what we talk about today using semiconductor as a case study. Okay, so we already understand the macro environment that semi industry is definitely something you want to focus on, right? And then you have multiple companies that you can definitely look at. Okay, so we have already established we are bullish on semi, okay, or at least me, okay, I've established that. Semis, to me, I'm bullish on it. Okay, then what I look out for is, okay, if today I want to buy into semiconductor, what is the season that I can get involved and buy? Okay, so to keep things simple, I'm going to look at semiconductor ETF, ticker symbol SOXX. Okay, so this is using seasonality, using statistics to better time my entry. Okay, so over here, I've done the research and then also to share it with you, right? This ETF, SOXX, basically is your semiconductor ETF. From the 13th of October to 6th of November, based on the past 10 years, it has always rallied. Okay, so I repeat, reliability factor 100%. What it means is that for the past 10 years, during this window of period, 13th Oct to 6th of November, SOXX has never dropped before. Okay, during this window, but between it, of course, the price is going to move, right? It's going to be volatile. But between 13 to 6 is always 13 here, 6 higher. But how it goes there might not be a straight line up. Okay, so does it mean 22-1 is going to be sure win? No, it's just based on historical stats. it has always rallied. But this tells me this year, if I'm looking at semiconductor, what's the best time to get involved in it? 13th of October. Do I want to hold it beyond 6th of November? Maybe, because if today I'm looking at semi from a macro long-term investment, then I'm looking at the best time to get in, which is somewhere around 13th October. Okay. Maybe I might get out partial profits on 6th November and leave the remaining position for the long run because I understand macro is upside. Okay, and I also know here that average return is 5.67, which means that, you know, I can kind of like have the expectation if today I enter at 13th of August and I exit at 6th November, right? If I invested, let's say 10,000 in this ETF, okay, the average return I can expect is maybe 5% out of it. Okay, not too bad, right? Less than about 3 weeks, you can actually yield a 5% return on average. Should be pretty decent. Okay, so that's how we can also combine, you know, seasonality with the macro perspective. Okay, so I do that as well for some of the stocks that I'm interested in long-term investment. Okay, so over here you can also combine TA, right? Some of you are very well versed in technical analysis as well. So this is the chart on SOXX. So you can see where we are right now. This is a daily chart. Okay, so if what I've done is I've just put in also a simple moving average. Highlighted a small demand, or you can call it like a support area. Okay, so right now, where is price? Price is basically around that zone as well, right? So we are probably going to see some support from that moving average. We're going to see some rebound reaction because of the demand supply, that support level as well. Okay, and then we have statistics to support this case to the upside, right? So you can complement that. Okay, so I want you to see that, okay, from seasonal perspective, how you can actually approach it, multiple angles. Okay, the simplest, of course, just trade it directly. But today, if you want to use that to build a case like semi over here, because you're looking at long run, okay, you can do that as well. Okay, yeah. So another example to show you, right? This is LUV, okay, which is an airline company, right? I'm not sure how many of you are aware of this. Same thing, okay? So if you take a look at this, right, LUV from the 3rd of September to 7th of December, these are the stats. So very, very attractive average return, okay? Because for the past 10 years, the average return, you know, is 18%. If you invest in S&P, the average return is less than that, and that's 1 year, right? 1 year return in S&P is less than that. But this one here, we're looking at an individual stock, and it's less than a year. You can actually have an average of 18% return. Okay, and that's the power of that. Okay, so what we then do is we basically, if you want to combine, okay, so first way, you trade it directly, enter a third step, exit on 7th of December. The second way is you use these stats to complement. Maybe you add in your technical analysis. Okay, so if you take a look at the technical analysis over here, okay, so you either trade it directly or you combine with tech. Okay, so you can see recently it has broken out of that bottoming pattern. Maybe you wait for a retracement and then you look for a buy all the way until maybe 7th of December. Okay, so you can do that, right? Just want to highlight over here how different traders uses the data. Okay, so just like I mentioned, okay, you can also use seasonality to invest. That's what I do as well, right? I time my entry, but my exit might not be following seasonal directly because I know it's a long-term play. Okay, so I do that. Okay, so some of the stocks that is related to semiconductor, I enter based on seasonal, but I don't exit entirely. I exit partial. I'll keep the remaining for long-term investment because I want to play out the semiconductor macro play. Okay, so over here, of course, the important element to add on if you're looking at investment, the fundamentals needs to be very strong. Okay, again, you want to only invest in companies that are strong FA, right? And it meets your investment thesis like STEMI. Why am I looking at it? Because I know the reason. Okay, so for example, Starbucks and BLK. Okay, so both have a very strong fundamental, right? And both have solid dividend and dividend growth, okay, Starbucks and BlackRock, okay, and valuation of these companies are still pretty undervalued, pretty good, okay, just to show you, right, I use the dividend discount model valuation. BlackRock IV is 980, okay, Starbucks IV is at 178. So both currently the market price is trading below the IV, okay, and what happens is that we use seasonal as well to time our entry. Okay, so both stocks has rallied for the past 10 years during October to December. Okay, so right now we're in that season, right? You can see we're in October all the way to December. These two stocks has always rallied for the past 10 years. Okay, so again, you add on all this element in, right? So with an average rally of about 10%. Okay, so not too bad, right? Because October, November, end of November, beginning of December, you have about 2 months-ish. Okay, it's 10%, not too bad. Okay, and what it means is that if today you're trading, you can look for an entry in October. Okay, and you take partial profits in December, and then maybe you hold it on for the long run because you understand fundamental is strong, it pays dividend, IV valuation is still undervalued. Okay, so all this is how I use seasonality to combine it and complement, right, with whether am I trading short-term or long-term investment. Okay, so I want to show you these examples here so that you can see how seasonality can help, right? It's really based on the study of historical stats.